Now, Nigeria's equities market delivered notable gains in 2025 despite high interest rates, inflationary pressures, and also cautious foreign investors' participation. Now, investor attention is now shifting to 2026, with questions focusing on the sustainability of recent rallies, sectoral performance, and also earning growths. Key considerations include the impact of monetary policy on asset allocation, evaluation or valuation levels amid rising costs, and the prospects for renewed foreign portfolio inflows. Market participations are also weighing risks from macroeconomic uncertainty against opportunities in banking recapitalisation, energy transition, telecommunications, and consumer recovery. The outlook for 2026 will largely depend on policy clarity, interest rates direction, and also the ability of listed companies to translate reforms into stronger, consistent earnings growth. Now, Emmanuel Nwamaka, Head Research, Blue Marina Asset Management. He joins me now to have this conversation. Emmanuel, you're welcome. Thank you very much for joining us for our 3 o'clock bulletin. The NGX delivered strong gains in 2025 despite tight monetary conditions. Which sectors and stocks were the key drivers for returns, and how sustainable are these gains ahead as we head into 2026?
All right, thank you very much for having me. Like you rightly mentioned, right, the NGX was very, very strong last year. I mean, we saw the Ocean Index up by 51.2%, despite the tight interest rate environment, right? Confirming that, I mean, performance was more of earnings recovery and valuation catch-up, right, rather than excess liquidity in the system, right? And this sort of means that, I mean, the stocks that were deeply undervalued relative to historical levels are now being priced at a relatively fair value. So speaking on the sector levels, I mean, gains were broad-based. We saw the consumer goods indices increasing by over 129%, and they benefited from pricing power and, of course, margin recovery. Then for the insurance sector, we saw an increase by over 65.6%, and gains were heavily driven by higher investment income and, of course, balance sheet improvement. Then for industrial goods, we saw an uptick in the space as well. We saw the index rising by 58.6%, and this was driven by majorly cement players in the space due to stronger pricing leverage. And of course, banking sector index was also up by 39.8% due to FX revaluation gains, higher interest income, and stronger capital positions. Then for the top performing stocks for 2025, I mean, many of the stocks actually rebounded sharply from their distressed levels, or I mean, heavily discounted levels we've been seeing before. And key among them is the NCR, which was up by over 1,354%, and it was due to the re-rating of the stock and, of course, restructuring optimism around the space as well. The Unicel was up by over 497% due to the balance sheet cleanup and as well recovery in recovery activities. We saw improvement in Beta Glass, which was up by 470%. TIP was up by 432%. Mutual Benefit increasing by 408%. Then Guinness was up by 398%. I mean, overall picture in Nigerian equity markets actually reflected a classic re-rating cycle. I mean, the price stocks were up to fair levels and, of course, supporting overall performance in the space.
Well, I want to say thank you very much, Emmanuel. I didn't need to ask many questions there. You just went on. But thank you very much, Emmanuel.